Portugal has held its first auction of government bonds in 3 years and easily sold €750 million worth. The bonds, which are due to mature in 10 years' time, were offered at the lowest rate of interest since before the economic crisis which brought the country to the brink of bankruptcy. This bond trader reflected the upbeat mood in the financial markets, saying because of all of the uncertainties that there have been and the progress that we've made over the last 3 or 4 years, because of the uncertainties related to growth and the amount of public debt Portugal has and our capacity to respect our obligations to the creditors, then we consider this interest rate, 3.57%, to be very interesting. The bond sale came as Portugal's international lenders, the so-called Troika of the EU, International Monetary Fund and European Central Bank, conducted their last evaluation of its compliance with the terms of the bailout programme. Strong demand for the bonds is a major confidence indicator that Portugal's Prime Minister was cautious. He joked, making a reference to his name, which partly means rabbit in Portuguese, that there's a proverb, you shouldn't skin a rabbit before you catch it. And he didn't want to be caught before confirming Portugal had completed all the measures in the bailout programme to the Troika's satisfaction, so he'd only speak about how they'd exit the bailout when the Troika had completed its final evaluation. Wednesday's auction of government bonds was intended to help raise enough money for Portugal to meet its needs for next year. Demand was driven by signs that the Eurozone crisis is abating and that Portugal is returning to economic growth after a brutal recession.